All right, guys, welcome to a new week. As we move through April, watch the data. We're gonna need more. We're getting some structure around jobless claims, which comes out Thursday with 3 or 4 good numbers, not good numbers, but numbers where you could start to compare week to week. And you'll start to get that with the monthly data as we move through April and more or less get into May, looking back on April, which will start to have some benchmarks. But that's not the highlight today. The highlight, I want to just blow up this chart just for example's sake of a long congestion box. In fact, let me even take this to even tighter. Take a look at, don't worry about the reds and the green lines. Just look at how long there was a congestion after the open. The market built all this structure. And what any congestion box shows you is the F word, only stands for fight. There's a fight that goes on, and you begin to see it, and you could begin to understand how long it's taking to find a winner. And one of the things I said, once we started to find a winner in here and certainly in here and had some follow through, and it was the bulls that were the winners, is that the longer it took to determine a winner, the more follow through that you'll probably get. So be careful fading any of this move and trying to sell it, because you just came out of a long fight and it was nasty. And so you get a lot of blood and you get a lot of shorts that don't get a chance because of how quickly it comes out of this box. They're chasing it all the way up, and they're like baby birds. The shorts are buyers that help chase it up and create the dynamic of follow through, in this case to the upside. Also, the dynamic of the longer the fight, the less longs are going to be on the team. Less longs are going to be on the team for the move up. That's the reason why it was able to move up. You need the dynamic of less longs. What happens is they fight and they get beat up. They try buying it. When it finally goes, they're not long. They tried buying it in here. They tried getting long in here. You try looking for a breakout there, breakout here, breakout here. You buy a pullback here. You just keep getting out. And then finally, when it goes, you're not on the team. Less longs. Remember this. Less longs, less longs equal less sellers. Very important algebra. Less longs equals less sellers. If you have less sellers, you have a better chance to go up. And if you had this dynamic of a long fight, there's just generally a probability of a protracted or steeper follow through, in this case to the upside. All right. Especially when you're talking about in the first couple hours of the session from the open, you got reason to move and reason for people taking positions. It's not like it's an overnight shop. It's during the day session. It's within the first hour or two of the day session. So you got the players playing and they can't get out of their own way. So once it goes, what's important is obviously to be in a position to time it and get long. But if you don't get long, not to fade it and do the opposite. So you're wearing it all the way up to here. All right. There are ways to fade it and not get yourself in trouble if it continues to rally. And that's important, and locations are important, but it's really important to have a good read on the market to understand how long it took to finally anoint a winner. And so when you're reading, if you're a fighter and you're trained properly, you're reading your opponent. You're not just looking to throw punches and be on the offense. You're reading your opponent, where he's weak, where he's exposed, what's a tell of him getting tired. And so as a trader, your opponent is everybody else. You're reading charts, you're reading order flow, you're reading to try to find the moment that the bears are wearing out, are wearing down. The longs have puked enough. And once you get the pop and you notice somewhere early on or somewhere potentially in there, you don't know it's going to rally all the way to where it ends up rallying. But what you can begin to ask yourself is, wow, this market isn't giving shorts from down in here any chance to get out with a pullback. And that keeps them underwater. And when shorts are kept underwater and kept in trouble, they remain buyers. You're not going to hear this a lot from any other trading video you watch on YouTube, unless they listen to my YouTube videos. After you sell it to get short, you're a buyer. After you buy it to get long, you're a seller. Remember that phrase. It's one of the most important principles of understanding market dynamics and reading charts. Subscribe to the channel, guys, and keep yourself safe.